Welcome to the Wealth Research Group weekly Titans of Industry interview. This is our chance to learn precious insights and absorb unique information from the best there is. It's like a breath of fresh air to us student investors looking for a high quality and trustful conversation. Every week, we ask the tough questions and get real world answers that are applicable to our financials today. Now, I have been tuning into interviews on YouTube since the '08 crisis and have probably north of 1,000 hours of content in my head. Of all the people I've had a chance to listen to, there's no one better at explaining complex issues regarding the big picture economy and more specifically about the mining industry than our guest today. As it pertains to commodities, you'll be hard-pressed to find a more rational expert that has thrived through innumerable boom and bust cycles. We're very excited to be talking to Mr. Rick Rule today. Rick, how are you doing?
I'm fine, and thank you for including me in your call. I appreciate it.
No problem. Let's jump right into this with some very key questions that everyone wants your special take on. So, Rick, we all know that many highly successful people write a book about their career, like the disciplines and principles that brought them to where they are today. If you had to write a book that will be your legacy to the world, what would be the two main subjects?
I think that the main subject would be that given the volatility and cyclicality in investment markets, but particularly the ones that I inhabit, that one must either be a contrarian or one will become a victim. That is, that one must trade across market conditions and use market conditions rather than being used by them. And the second biggest theme would be that the greatest of all investment risks, bigger than political risk, bigger than cyclical risk, is the risk that's conveniently located to the left of your right ear and to the right of your left ear. You control most of your own investment decisions. You control how hard you work. You control whether you govern your own emotions. Those would be the two most important themes.
Okay, I love it. First of all, personal discipline and not trusting anybody else for your own decisions and not being not following the crowd. I'm very intrigued to know, in one decision, one moment that you believe, in retrospect, has been the most critical in your investing career. And what was your mindset in the moment of that decision? Did you realize the importance of the moment, or was it a blessing that you found out later, analyzing it years later?
Well, I'm going to take liberty and give you two, in fact, because they're equally instructive. The most important was, for me, coming out of the 1970s bull market in resources, which was so far the most extraordinary bull market of my career. I made, for a young man, an unbelievable amount of money. And of course, I made the young man's mistake of confusing a bull market with brains. When the wind is at your back, and when the big thinkers in the world, the World Bank, the Royal Bank, Exxon, all those people see current conditions extending forever, which are favorable to you, you tend to forget that markets will work. And I did. The long bull market in resources made them more expensive. So it made consumers conserve, and it made producers invest. The natural outcome of that was more supply, less demand, and falling prices. So that's when I learned that you had to be a contrarian or you would be a victim. The crash that we saw in commodities markets that was a consequence of the boom caught me completely unawares and took me from being a very wealthy young man to actually having a negative net worth.
Interesting.
The flip side of that was understanding that just as the bull market had been the author of that bear market, that bear markets are also the authors of bull markets. So realizing in the year 2000 that the uranium price absolutely had to go up, or else flights would go off around the world, was the antithesis of the experience that I had had earlier. I didn't know the timing and still don't know the timing in terms of markets like these, but I understood that a market where you produce the stuff, in this case uranium, for $30, and you sell it for $8, losing $20 or $22 a pound, is unsustainable. Therefore, the uranium price had to go up. Therefore, the 4 or 5 little uranium juniors that had survived a 20-year bear market were likely to soar. That portfolio, 4 uranium juniors that we identified, had such a spectacular run from 2000 to 2005 that the worst of them returned 22 to 1. And the best of them, I'm not kidding, went from 10 cents down to a penny, and from a penny, listen to this, from a penny to $10.
That's insane.
The single most astonishing financial performance of my career.
That's insane. And that just goes to show you that you must look for these bottom cycles and things return to the mean. There's no other way.
Yep.
Okay, interesting. I want to jump into the mining industry for a minute, get your details on what's going on with precious metals first. We've seen oil prices going down throughout 2016. And we all know that energy expenses are a big part of these companies' balance sheets. How will that come into play in the next earning release? Or do you think that the producers have already priced this into the shares? What do you think this is?
I do think that energy prices have been a factor in the better than expected financial performance of the gold mining industry for at least the last 2 quarters. In fact, I think there are 3 factors that your listeners and subscribers need to pay attention to. One is, in fact, low energy prices, which I think will continue for probably 18 months. The second is the poor performance of almost every currency in the world relative to the US dollar, which makes producing gold in places outside the United States, places like Canada and Australia, cheaper. When you sell your products denominated in US dollars and you pay for your inputs in currencies that have depreciated against the dollar, it reduces your cost. I think the most important component of cost containment, however, is a bit more subtle, and that is that the attitude that existed in the gold mining industry in the last decade, expansion at any price, stupid M&A transactions, resulted in disastrous investment performance in the last bull market and resulted in many of the senior managers of the mining companies that perpetrated that idiocy being fired. And I think that the memory of those poor decisions is fresh enough in the mining companies' minds that they will run their businesses more prudently, at least through the beginning of this cycle. So my suspicion is that the earnings surprises, really as a consequence of the cost containment that you described, will be a feature of this bull market for at least the next 2 years.
That's exciting. I want to talk to you about silver for a minute. Since gold is what governments hold as reserves, and for some reason they haven't done the same with silver, its role as money has been forgotten. But once crisis looms, it might resume its role as money. It certainly has a lot of demand from the private sector, and we could see the price accelerate. Since it won't be just an industrial metal any longer, and since the supply isn't sufficient to satisfy both industrial demand and government demand, what do you think can happen to the silver price going forward?
Well, it's always dangerous to give somebody like me use of a word like could, because I can do almost anything with it. Mm-hmm. But it's important that your listeners pay attention to the question that you asked. Historically, precious metals have been unique in that they have been mediums of exchange, in other words, money, but they've been simultaneously a store of value. What's interesting about gold and silver, and to a lesser extent platinum and palladium, is that on transfer, they don't represent a promise to pay. They represent payment itself. The payment isn't an obligation of the payor. His obligation is done because the specie used to trade, in this case the precious metals, isn't like a fiat currency, a banknote, or a promise to pay. It's payment in and of itself. And during periods of time when social and commercial trusts fade, the idea of a medium of exchange that's simultaneously a store of value becomes very, very important. Silver, of course, is the particular beneficiary of this because although it has all of the advantages that gold has in this context, it's durable, it's sustainable, all these kinds of things. What's useful with regards to silver is its lower unit price, which means that it's effective as a savings instrument for poorer people, and it's also a more efficient mechanism of exchange because it can be used for transactions that are smaller than a similar amount of gold could be used for. So my suspicion is, and I'm not saying we will, but if we experience the type of social and commercial dislocation that some people fear, I think that silver would do extraordinarily well in that circumstance. But even assuming that that circumstance doesn't come true, if you merely assume that zero interest rates and negative interest rates will continue to spur interest in precious metals, it's worth noting that the low unit value of silver makes it a more efficient savings instrument for the 2 or 3 billion people in the world who, while they want to save, don't have sufficient savings to store their wealth in gold, but rather have to save in smaller amounts and in incremental amounts. And silver has fulfilled that role as a savings instrument during times of crises in certain parts of the world. Now I'm thinking about the Middle East and South Asia in particular, for many, many, many years.
That's very interesting. So we could see a scenario where silver subconsciously becomes money again, and there'll be a pile of poor people, which is probably the largest group of people in the world, going into silver. And as you said, and this is the first time I've thought about it this way, it's immediately payment. There is no credit or trust in that transaction. Lastly, Rick, if you had to pick one commodity, just one, and one way to invest in it, meaning a producer, a prospect generator, an explorer, etc., what would be that commodity right now, and what would that strategy be?
Well, certainly for me, those questions are a bit disconnected. If I had to pick one commodity right now, it would be very difficult for me. I own them for different reasons. I understand the question that you're asking me. I'm just having an extremely difficult time answering it. I think, pardon the pun, but the most explosive upside I see is probably uranium again. It costs $60 to $65 a pound to make it, and the producers sell it for $26 a pound. This is extraordinary. It could easily take 5 years, however, for supply and demand to get back in balance, irrespective of price. I'm also really attracted to the platinum and palladium markets because I think they'll get pulls as precious metals, but they're driven by industrial shortages. And for American investors, I'm particularly attracted to the water play. Sadly, again, I pardon the pun, but they're very illiquid. It's very, very, very difficult to play it. Had you asked me about a strategy 2 weeks ago or 3 weeks ago, that probably would have been simple. For speculators, I really like the risk-reward offered up by Ivanhoe Mines, which is putting a monumentally large copper project into production, but also a very large platinum and palladium project in production. When I say 3 weeks ago the stock was at $1.10. The stock is now at $1.75, and that's a rather aggressive run-up. Now, the truth is that if my own outlook with regards to the natural resources markets that will exist 2 years from now comes true, $1.75 will end up being cheap too. It's also worthwhile, and it's also very dangerous on a call like this to give people a name that lasts rolling around the internet for years and years and years. It's worth noting that, Ivanhoe is a speculative strategy. While it has spectacular upside, it has downside associated with the capital raises needed for the projects and also their locations, which are South Africa and Congo, respectively. So look at a speculative name like Ivanhoe with money that you can afford to lose half of if things go wrong.
Interesting. Rick, it has really been a pleasure to have you on here. You're a walking encyclopedia of the hard asset space, a truly unique figure in the landscape due to your reputation and being a very stand-up guy, taking the effort to educate all who ask you questions. If listeners want to get in touch regarding their investment needs, what's a good way to do that?
The best way to get hold of me probably is via email. That's rrule, R-R-U-L-E, at sprottglobal.com. And I'd be happy to make them a special offer, which is that if they send me their natural resource portfolio in text, not as an attachment, with both company name and symbol, I will rank their resource holdings according to my own criterion with absolutely no obligation. And I'll email that back to anybody who requests it of me.
That is a sensational offer. I personally got to tell you that. Thanks again for taking the time, Rick. We've learned a lot and appreciate this. Thank you, sir.
Oh, it was a pleasure. Thank you for the opportunity.
This was an eye-opening interview with mining legend Rick Rule. We asked him if he ever writes a book, what would be the critical principles of success mentioned in it. Rick says it would be to have a contrarian mindset. Otherwise, you always end up last at the show and lose big time. I've seen the few who are truly independent thinkers achieve great success and implement this myself. Make sure to download my personal game plan for 2016, no holds barred, which includes this exact winning strategy. He also mentioned that the second principle of success is not being your own worst enemy. You can do that by letting your emotions take control of you. I wrote about this mistake in a report called Activity Disease, and any investor who wants better self-discipline and restraint, which is most of us, should read it. We then asked Rick for his career highlights, and he mentioned that the late 70s made him rich at a very young age, but he lost it all as the market cratered. I wrote a special report on the timeless principles of success, such as intelligent asset allocation, proper position sizing, and stop losses. These would have eliminated the possibilities of suffering a brutal loss for Rick and could for you. Check them out right below. Rick tells us that the best returns in his 40-year career were in the uranium space in 2000. He said the juniors were his ticket to explosive gains. We just published literally an exclusive manual on how to spot these rare gems. We call this report Steroid Stocks, Digging for Profits. It's available right below as well. On precious metals, Rick comments that gold and silver stocks will be a must investment. Regarding silver specifically, Rick sees insane upside if crisis hits and even if it doesn't. We write a lot about this on our 365 Wealth letter, our free letter, about the epic crisis in the global economy and how to prepare. You might want to read our Uncharted Waters report regarding how to protect your life savings in case the worst does happen. Lastly, out of all commodities, uranium presents a once-in-a-lifetime potential according to Rick's educated opinion. In light of that, I put together a market summary on uranium and the unique opportunity for investors which Rick believes will create monstrous gains. You can download Radioactive Explosive Gains with Uranium and learn what I've uncovered. Thank you very much for listening, and please tune in every week to become better and strengthen your financial fortress with us. Thank you very much.